Alright, it's Thursday, July the 25th, 2013, 6:25 a.m. Eastern Time. I'm going to do a little video on range bars. Somebody was asking me how I did my technical analysis with the time frames I use. So there's a disclaimer at the beginning of the video you should read. There's this disclaimer you should read. And this is for educational purposes only. So let's move right to the range bars. Okay, I drawn this up a year or so ago on range bars. A down candle will, open on its highs and close on its lows, but it will always have it will never have, I should say, a wick at the bottom, with one exception, which I'll explain in a moment. But you can have different size wicks at the highs of a down candle, but never one at the bottom, with one exception, and I'll get to it in a moment. With the up candle, it's the same thing. It opens on its lows and closes on its highs, but it'll never have a wick on its highs. The range will remain constant. It won't be it'll be the same length bar every time. They'll all match up, counting wicks and all. They'll always be the same height. All right, now it depends on what range you choose. Let me see what I got under. All right, let's go with this 8 range chart right here. I have this set for 8 range. So let me go to Indica, see data series, and you'll see I have a range chose right here in the type. You can choose tick, volume, and so forth in NinjaTrader right there, and then I just type in what I want, 8, 144, or whatever range chart. So this thing has to move. For this to make a new candle, it has not to tick 8 ticks and ticks. It has to move 8 ticks in range. So it doesn't have anything to do with time. It could take a year, or it could take 10 seconds, or the time really is irrelevant. It has to move 8 ticks in range. Now, if I choose a 21 tick, it would have to move 21 ticks in range before it moves to the next bar. And here I wrote some stuff. I don't even know, it's been so long ago I wrote it, but you can stop the video and read this here. And let me move down a little more. You can restop the video again right here and read that if you like. And I wrote up a little more about it, different things about range bars and everything. They're constant. Range bars show trends more readily, and they also show the sideways market more clearly. I like that about the range bars. Without any choppiness in it. They also will smooth out my stochastics indicators along with some other indicators I got. It smooths them out. It shows very good with the crude oils, for example, and other I've used it in other markets. The stochastics indicator will show really good divergence signals at the highs and lows of these swings, where the momentum was getting weak. And the stochastics indicator, this is the stochastics indicator down here. Move this over again on the 8 range, and you can see here we had a little divergence signal on this one right here. And I use this in combination with other things. I never use one thing by itself. Drawing tool right here. And here it made a low. Okay, we made a low of 104.52, and stochastics bottomed out and flattened out. But when it made a low of 104.42, another 10 ticks lower, the stochastics indicator come down and give me a more of a V formation and a higher high in momentum and a lower low in price, giving me a divergence signal long, telling me this ought to go long. Now, I also like, because they close on their lows, I got an engulfing candle right here. And you could have used this for an entry. Right there is an engulfing candle. Now let me find my picture of engulfing Windows photo viewer. Let's see what we got. All right, here we go. Long. As you can see here, we got a red candle. Now I prefer them right at the lows. I prefer it a little farther back on this 8 range right here. But what we got is we got price moving down, and it comes into the low of day or some swing low of some sort, a pivot point, and this blue line here also is a swing low on a range chart that I've drawn off. So it comes down and penetrates a support level. Then I get a green candle that completely engulfs the red candle. I don't care if it's right to the tick. This one surpasses a little bit, but as long as it's right to the tick. And what I'll do is I'll take, and I got a tick counter here, range remaining. And it says I got 3 ticks remaining on this stick. So 61, 62, 63, 64. If I place an order to buy, and this wouldn't be an engulfing candle. This is an example where you'd place your stop.
Order pending.
I place an order to buy right there, buy stop. This candle will be green if this order gets filled, because it's got to close on its highs. This green candle here has to close on its highs to fill me. And when it fills me, it goes to the next tick. It starts making the next candle because it completed the range on that one. And then that's how I would have entered. And the entry would have been exactly at 104.55. Now, if you use a buy stop, which is what I got in there now, it could easily be 105.56 or 57, give you a couple ticks slippage. You can use...
Order canceled.
Let's put in a... and here you can use this, leave it at 0.
Order pending.
And now it has to fill me at 104.65. If price jumps that and keeps moving, it won't fill me. So that's the risk I take putting in an order like that. I'll get a precise entry, but it can most possibly jump my order, not fill it, and just keep right on going and leave me behind. All right, so to keep that in mind.
Order canceled.
Okay, that's how I like that's why I like range bars. So, and I wanted to go over the reason for the, let's see here, move this on down so you can stop this and read this if you like. Traders will find that the market makes fewer trades and all that stuff. Okay, let me bring over my day chart for crude oil and show you why this is range bars also right here. But you'll notice there's wicks at the bottoms and tops of this range. Okay, to make a day chart for me, what I like to use, I'll put in enough range. I'll put the range in this. I'll go to data series when I'm creating this chart, and I'll put in enough range. It could be 1,000, 200, 300, whatever. But as long as it's more range than crude moves in a day, all right. Then I'll choose data series 24/7. Now, whatever time period you have for your day breaks is when it'll stop making that candle and start the next day. It'll stop that candle right there wherever it's at, no matter how much range it had. And it'll start making the next candle. So, alright, this one's set for 24/7, meaning at midnight, Eastern Standard Time, it'll stop making a candle, no matter how much range is in it, even though it's supposed to take off 500 ticks in range, and start making the next candle. So last night, when this one ticked off at its lows, it left me a wick because it didn't have 500 ticks in range made, and it had to start making a new candle because a new day started. So this gives me a very accurate candlestick stick pattern starting at midnight. Now, if you want to use electronic session, then it would start at 6 o'clock and end at 5 o'clock Eastern Time, 5 p.m. All right, and if you use the pit session, it would start at 9:30 and end at 2:30. 9 o'clock and 2:30. Excuse me. I'm thinking about the stock market. Okay, as the 9:31. All right. And that's why I like to use range bars. They give real smooth, and I got used to using them. Now it's whatever works for you. What works for me may not work for you at all. So keep that in mind, and that'll complete this video. I was wanting to keep it real short on range bars.